Destination Africa, brought to you by Standard Bank.
It does present a huge one, but it's also pretty much a risky one. For the truth is that except you managed natural resources earnings very well and through the best set of policies and institutions and choices of public investment that are effective and reflect the right priorities, you will not be able to convert non-renewable capital, that is mining endowment or petroleum endowment, into human capital and physical capital. These are the two capitals that you need in order to really accelerate the pace of economic growth and development.
How do we start getting things on the right track in that regard?
As I said, your choices of policies matter. So first, within this sector itself, you want to forge the kinds of policies that are really transparent, enable the highest levels of competition, that show that significant probity and accountability. And then you need to have the right institutions that regulate the systems and therefore enable you to not leave things to the discretionary distortions that are possible. And then you look at the investment of the proceeds of the sector. You want to invest in human development, health and education, because you want to get the kinds of citizens that can match the knowledge of their contemporaries anywhere in the world. It's going to be skills on the basis of who's got the best to offer. And then, of course, your investment in resolving your infrastructure gap, because all of these matter for the investment climate and the cost of doing business. If it's too high, then your environment will not attract the best of investments.
You mentioned economic policy, and it's interesting because it comes at a time where there's a lot of rhetoric about that erodes, the kind of confidence levels we're seeing when it comes to Africa's economic policy, comments around nationalization, indigenization, where in some instances we even see the lack of universal application to the rule of law. And that's eroding, it seems, something as simple as the trust factor. It's a key ingredient that seems to be missing between the relationship that African governments have with the private sector. How do we bridge that gap?
You can bridge the gap by forging very, very credible public-private dialogues. The truth is that it's not sufficient anymore for any sector to act alone. You've got to have a collaborative partnership between the private sector, the public sector, with civil society also being in the room. Because what you want to do is you want to keep the civil society engaged, because ultimately these other two sectors owe accountability for results in any of the discussions that they have on issues that affect the populace.
Eroding the trust factor as well, and it cropped up as a concern at this year's Mining Indaba over in Cape Town, is corruption with regards to the awarding and transferring of ownership of mining claims and leases. How do we overcome an obstacle like this, which is working, it seems, to deter investment?
The Extractive Industries Transparency Initiative was really conceived at the time. I happened to have been one of those at the early beginnings of this great idea, global principle. And the time it was conceived, it was because we had seen that the mining sector, the petroleum sector, naturally lends itself to some enclave type approach. And therefore, there was a lack of transparency inherently in the way that the sector operated. And so we thought that by having some basic principles that both government as well as the private sector would seek to aspire toward, it would bring openness and it would bring transparency to the activities of the two parties, with civil society being able to follow. And I believe that when you have regulatory systems that enable you to deal with your mining endowment on the basis of auctions, on the basis of competition, you maximize your earnings. It is not sufficient for governments to enter into room deals with investors in this sector.
Of course, these are a couple of factors that are influencing, the flow of capital away and towards safer areas of investment. We also see capital flows towards areas where, costs associated with doing business aren't as high. And a big contributor to that cost factor here on the continent is inadequate infrastructure. When do you see us getting to a point when infrastructure investment is supportive of Africa being open for business?
The infrastructure deficit is a very, very great obstacle to economic growth. I mean, it robs Africa of about 2% of GDP annually, reduces productivity by about 40%. So there is a sense of urgency in seeking to resolve it. That being said, you cannot resolve it until you really set in place the right policy frameworks. The reality is that the current public investment into infrastructure, though huge, is not sufficient. We need at least $93 billion annually to solve Africa's infrastructure deficit. Today, current investment is some 45 billion, so you're talking some additional 48 billion, although of course our studies show that and some 17 billion out of that can be realized through better policies, better efficiencies and all of that. But then that still leaves you with a real gap of some $31 billion. In order to solve it, you need public-private partnerships, and you don't attract the private sector to solving an economic problem by having the wrong or the chaotic policies in any of the sectors of infrastructure. You can take the lessons of the telecom sector, where the government went ahead with the right legal frameworks, with the right regulatory systems, with the right competitive frameworks, and put the incentives in a very, very clear and concise way. And the private sector saw immediately the opportunities there and had appetite to invest.
Of course, you've highlighted private-public sector partnerships and how that can enhance productivity and investment moving forward. What about charting the way forward for greater South-South cooperation? How do you see that? And what role do you see that play?
I see a big role because, I mean, you're talking today of emerging economies really being the engine that's driving growth at a time of global economic crisis and the lingering effect of it. And so with South Africa becoming a part of the BRIC and turning it into BRICS, that's an opportunity for even closer collaboration between South Africa and the rest of Africa and the rest of the emerging economies of China, Brazil, India, and the rest of them. And frankly, what I see is that knowledge can flow from both ends. There is a lot that Africa can also send to the rest of the world, and there's a lot that Africa would be learning in the way that these countries have gone ahead. We always say that Africa is today where China was 20 years ago and where India was 30 years ago. And so, I see that the exchange of knowledge, exchange of financial possibilities would present a huge new realm of opportunity for these countries. And trade is going to be at the heart of it.